Palisade Radio is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and on the line with us today is returning guest Mike Swanson. He's the publisher of WallStreetWindow.com. Mike, thanks for being so kind and coming back with us on the show today.
Oh, thank you. It's great to talk with you. Some exciting things going on in financial markets.
Sure is. It's been a heck of a different year this year so far, and I'm just looking at your website. You've got a headline with my buddy David Skarika in there too, and it says the hidden bull market in junior mining stocks, which to a gold bug might seem confusing because it's pretty obvious what's going on. We're up 150% on the year in these little stocks, but it underlies the fact that most people have no idea gold's on the rise yet, and I think that that's going to have huge implications for this bull market moving forward.
Yeah, definitely. I mean, as you said, for people who are invested in gold or the mining stocks, it's obvious what they've done this year. It's been an incredible year. They've gone up tremendously. In fact, I use TC 2000 to break down the sectors that make up the stock market. And so far, year to date, mining stocks are the number one sector. It's just that's how good they're doing. The thing is, most people aren't aware of that for two reasons. First of all, the typical American investor pretty much only focuses on the S&P 500 and, a couple 100 fad stocks like Apple or Facebook or Nike or whatnot. And they're kind of oblivious to what's going on in gold. However, there are people that do trade gold and mining stocks, and more so than ever before, actually. So even the traders are kind of unaware of what's going on with the individual stocks, especially the junior mining stocks. In fact, if you look at any typical trading day, GDX, GDXJ, which I do own, those are ETFs that own mining stocks. And of course, there's GLD and JNUG and Nugget. And then there's a horrible ETF that's destroying people called Dust. It's a triple short gold stocks ETF, and it just falls just about every single week. But these ETFs are typically on any given day, at least a couple of them will appear in the top 10 ETFs traded by volume. So there are people, that see what's going on with gold. If you go to stockcharts.com, you can see the most popular tickers on any given day are also usually among these. So there is an awareness that, gold is going up because of what's going on. But there's still an unawareness about the junior mining industry and the junior mining stocks because, as I mentioned before, so many Americans are kind of oblivious anyway, but then even those that are, they don't know what's inside the ETFs and beyond that when it comes to investment opportunities. The ETFs are so popular. The other week when there was that Brexit event and the market fell for 2 days, 50% of the volume on those 2 days was buys and sells of exchange-traded funds. So fewer and fewer people are trading individual stocks. All that said, the thing is that the opportunities in individual stocks are so much greater if you're in the right ones than it is in the exchange-traded funds, especially at this point in what I think is a bull market for precious metals and mining stocks, which is going to last probably 3 to 5 years at the least, because that's on average how much an average bull market lasts. And this might be the biggest bull market we've ever seen in our lifetime because we're just coming out of the worst bear market. But I just want to emphasize that with the junior mining stocks, you have small cap stocks that trade in the Vancouver and Toronto stock exchanges, which got demolished in that bear market and reached super low valuation points. And in a bull market cycle, they normally get to market caps of 25 million to 30 million. And that's if they have nothing. That's like an exploration company with one property that really doesn't have anything. And those stocks right now are trading like under 5 million on a market cap. So I think, and that's now. So I think the gains in many of these stocks can be 3 times, 4 times, 5 times where they are right now, even if they've already doubled this year.
Yeah, I like your joke about Dust because it's been spectacular how the tables have turned and how poorly one would do shorting the gold stocks right now. On the flip side of that, our friend David Skarika and I had a joke. I think late last year when I was in the Bahamas, that we were talking about our JNUG 1 million trade, and we were saying that we would ride JNUG up to $1 million, which sounds ridiculous, but it's gone from $20 up to $300 almost this year. And if you look at it adjusted for all the splits that have happened, because this stock does have to readjust because it's so levered, it was as high as $10,000 in 2014. So just a huge amount of leverage you can get. Let's talk about these little stocks that you're talking about. And you've been participating in some private placements, which is something that we do quite a bit. Why don't you educate listeners on the idea behind these private placements?
Yeah, sure. When you have, I'll explain it to you this way. When I first bought mining stocks, it was back in 2002, and I was getting, I was new to it, really. And I was buying stocks like Yamana Gold for $1, and Eagle for probably $10. EGO was under $1. And of course, they've gone up tremendously since then. And, I haven't been in every single year or something, but was my entry point. And one thing I found out that first time I was in the mining stocks in that first year is I would see these announcements from Yamana Gold, among others, that they had to raise money, and they're issuing stock to raise money in secondary offerings. And I wasn't used to that happening because I was used to buying NASDAQ stocks and playing internet stocks. And so in a lot of companies, raise money by issuing debt. That's typically, issuing bonds and so forth. The mining industry is different because these small cap mining stocks, they usually raise money not through issuing debt, issuing bonds, but by selling shares to people in secondary offerings or what are called private placements. So, for example, let's say there's a stock trading at 10 cents. They may raise 1 million shares or more than that, really like 5 million shares, let's say, for 8 cents to raise a couple $100,000. And then they'll use that money to buy a property, to drill in a property, or even to, do estimates on can we mine it, or to raise money to open up a mine, and so forth. But they use it, that's how they raise capital, not by issuing bonds. And that provides an opportunity for investors like you or me or whoever's listening to participate in these things. Now, the benefit is sometimes the stock might be trading at a discount, other times it's not, but most of the time you have what's called a warrant attached to it, and that's an option to buy more stock, like a long-term option. It may last 12 months or 24 months or 36 months, usually at a higher price. So, for instance, I bought one a few weeks ago. The stock is trading today around 13 cents. The private placement was for 10 cents, so I bought it at a discount, but then it's got a warrant attached to it, I believe at 15 cents. What that means is not only have I bought the stock at a discount, but if it goes up beyond 15 cents, I'll be able to buy more with a long-term option, even if that happens a year from now or whatever. So that gives me an opportunity to potentially make even more money than I would have if I simply just bought the stock, normally right off the stock exchange. I do that too, sometimes. Every week now, frankly, I'm looking for new stocks to buy, whether that's just normally as everyone does, on the stock exchange or a private placement, because I think, this is really a wonderful opportunity I think right now to get in early the first year of a bull market that's going to last 3 to 5 years. And I listened to an interview you did with Rick Rule, which is really interesting because he explained this type of investing method and pointed out that he actually did this back in 2001 and 2002, maybe starting in 2000. But those 2 or 3 years, he built a big position in many mining companies by doing this type of private placement activity, and then witnessed, wonderful moves in the years to follow. And what was interesting was when he was doing that, there's really no interest among individual investors when he started doing this in the 2000, 2003 time period. The stocks had ended a bear market, and some of them would go up, double even and go sideways or whatnot. But it really often takes 1 year gains for the small or typical investor to get interested in something in the stock market. And I think that's really where we are with gold right now. Most people, aren't really into trading gold stocks yet. It's just really the hardcore people who understand what we're talking about already that are the ones really taking advantage of these kind of setups.
I think that the gains are just so spectacular for any investing in the gold sector that a lot of people say, well, I can just buy Yamana Gold on the open market. Why would I bother with the added complications of doing a private placement financing? And making 10 times over 3 to 5 years is certainly exciting, and most people will never be able to say they do better, but why not make 100 times? And that's what all these entrepreneurs in the mining business like Rick Rule have done time and time again, and that's only achievable through extreme luck or more likely private placement participation. Next question for you, Mike. I want to talk about a pullback in the sector. Okay. A lot of people have been standing on the sidelines with some of their capital, afraid that they could jump into a gold sector already up 150% just to get whacked in half with the first pullback of the bull market. What's your expectations on that?
Yeah, well, in all markets there are pullbacks. There's no doubt about it. And gold and mining stocks can be very volatile, both on the upside and the downside. However, at this moment, there's so many people looking for a pullback, and every single day, I see calls for pullbacks from various people, writing this all over the place with huge followings. And I have subscribers that email me these things, so I'm not going to name names, but the basic thing is that when gold was around $1,300 an ounce the other month, a lot of people were thinking it's going to pull back and we'll have a collapse. And now gold went up to $1,400 an ounce, close to it, just a few weeks ago. And once again, we're pulling back off of that. And when you see gold go up to a level like that and start to pull off, it is easy to think, oh, no, it's going to crash, especially when we've had that giant bear market of the past couple of years, and that memory is still vivid in everyone's minds. And so forth. So I understand it's easy for someone to think it's going to pull back, and there's so many people not in because they got shaken out by the bear market and they want a pullback to happen and so forth. However, I want to say that there's two. First, the most compelling argument that people have for a pullback is they'll look at the Commitment of Traders report and point out that there's a big short position among commercial traders, and the speculators have built a sizable long position and so forth. However, I'd like to point out to that argument that the open interest for gold has totally exploded. And when that happens at the start of a bull market, those past readings no longer really mean that much. And I find the reports to become totally unreliable to use as a market timing instrument. As an example of this, you can look at the U.S. dollar index in 2010 and 2011. The same exact thing happened with that. The open interest exploded and the size of the positions reached record levels in a short amount of time. And the U.S. dollar hasn't really had any real pullback ever since then. So I find that those reports pretty meaningless at this point. The other thing is there is a reliable indicator that I do know of to time a pullback in a bull market, and that is if you look at the relative strength ratio, the mining stocks vis-a-vis gold, if that starts to falter, that becomes a sign that a move is near an end. What this indicator is measuring is the performance of the gold stocks versus the metal. When you're in a bull market, the gold stocks tend to go up more than the metal does and pull back less. They act stronger than the metal. When you're in a bear market, the opposite happens. So if you think back to 2011 to 2014, the gold stocks fell something like 90%, while the price of gold, fell a fraction of that, like 20% or something. And in the bull markets, the opposite happens. The gold stocks can go up 10 times the price of gold. So that's the key thing to look at. And if you think back to 2011, when there was the last real major top, the price of silver doubled in just 2 months or so, and the silver stocks didn't even go up. So that was a big warning sign that performance of the stocks versus the metal was given a warning sign. So that's not happening right now. It's the opposite. And until gold is going up and the stocks are no longer going up, I can't look for a real top, not even a sizable pullback. Instead, I think what we're going to see is a continuation of what we've been seeing so far this year, at least into the end of this year. And that is a market that's essentially going up at a 45-degree angle, where you don't get big pullbacks with the mining stocks, but more like pauses. And yes, during these pauses, gold may pull back 50 points or 100 points, but it's no real big thing. So I think that's what we're seeing right now. And we saw that happen in May when gold went to $1,300. It pulled back down close to $1,200, but the gold stocks barely pulled back. And that's a sign that you need to buy when it's going on. It's going on right now. So my message to people that want to get into gold stocks and are waiting for a pullback is you're seeing a pullback take place in gold right as we're speaking. I can't predict if it's going to fall another $20, another $30, another $40. It doesn't really matter. If you're going to buy gold stocks, you can't time, the exact hour or the exact percentage it's going to come off of a high. You just got to buy when it starts to come down. It's already started to come down. I think you should start buying now. Now the question is, how do you manage purchases? And that's really a big question that really has the most to do whether someone's going to make money in a trend or not. Because if you go in 100% on something all at once, it's very difficult then to hold when some sort of pullback of 10% does happen. You'll get shaken out, you'll get scared, and it could go up for 5 years. So what I advocate for people to do is just put 20% of your money, roughly, into gold stocks. And that's what I'm doing. That's what I've done this year. I've got 20% core positions via the ETFs, and then around them, I'm buying private placements and more speculative small cap stocks right off the stock exchange. And I'm buying them not by trying to time little pullbacks in gold or the gold stocks or the GDX or whatnot, but I'm looking at the individual stocks themselves, how their charts line up, and the fundamentals and the opportunities that I see week by week and month by month, because that's how I'm playing it. And I think that's the best way to do it at this point in time.
I want to insert a little bit of a shameless plug here. We are one of the larger shareholders of a company that you were just talking about that's doing a 10-cent financing with a half warrant at 15 cents, and I know it's one that you're participating in. It's called Carube Copper, and we put out a research piece. It's a company we're working with a few weeks ago. Let's just use this as a specific example to give people a taste of what you're looking for. It's a relatively small market cap company. It hasn't moved very much, so there's a lot of upside that still remains in place.
Yeah, sure. That stock has of course, it fell in the bear market down to a penny, as many of these things did. And right today, it's trading around 13 cents. And it's got properties in Jamaica and elsewhere that are very interesting. It's got an interesting management team, and you may have got in it before I did. I'm not really sure. It doesn't really matter. But what I'm doing is I'm looking at the charts in the mining sector, looking through lots of stocks, and I'm looking at the news in the entire sector too. The press releases that are coming out for various companies. I'm keeping my eye on websites such as yours and so forth. And I'm trying to get a feel for what's going on in the entire sector to look for stocks that are at good investment points on the charts and with private placement opportunities. So that stock came on my radar screen, and I went and examined its fundamentals and its story. And then I also looked at what's a very important thing when buying these things. That's its current valuation and how many shares are outstanding and how big the float is and various other factors. So with that stock, The market cap is only around $8 million, and I expect that market cap is going to go up to at least 25 million, 30 million, probably within a year. And that is if we're just in a rally in the overall sector for a year or two. If we actually have a super bull market, there's no telling where some of these stocks can go to. But in the last two bull market cycles, I would see companies such as Carube Copper reach 25 to 30 million market caps, and that's like the minimum. Some of them would do better than that. So those are the kind of what I'm looking for in that stock and most of them. And it's a very interesting play and opportunity right now. The thing about that stock also is if someone goes and the symbol CUC trades in the Vancouver Stock Exchange or CNSX, if they go look at the chart, they'll notice that it's come out of a base, or it's trying to. It's been going sideways for quite some time, and there's not a whole lot of trading volume in it over the past couple of weeks. That's something I also see happens periodically in these kind of stocks before they really get going. That stock breaks out and the volume starts to pick up. Then it can go up and really shock people when it does it on a percentage basis. That's something I've been noticing is happening with many of these stocks. So I see it, as a sleeper pick at the moment that will eventually wake people up. And there's kind of like two stages to these type of situations. The first stage is, well, I'll say there's three stages. The first stage is they do these private placement offerings and people are getting into it on the open market and it's basing out. The second stage is a breakout where you can get a really nice price surge. They can go up 50% or even 100% in a short amount of time. And if they do that on high volume, what will end up happening is you'll then attract a third round of buyers, which can really propel something higher. Now, who these people are people who primarily use technical programs to look at the volume and search through lots of stocks. And as I mentioned before, I use TC2000. I'm doing this myself to see what's going on. And sometimes I'm buying stocks in this third phase, I'm calling it, or being that third round of buying. And who these people are people who are looking for leadership stocks that have a lot of volume and attracting a lot of attention. They're not getting into private placements. That's opportunities come and gone, but they're looking for another breakout, another big run, and so that's what you can look forward to. The three different types of rallies that are taking place with various mining stocks right now.
Mike, let's rewind a couple of months and talk about an example of another company that we both participated in the financing. It's called IDM Mining. It's a pretty well-known name considering how small the market cap is. And at the time, it was trading around 9-10 cents. The management undertook a very sizable financing, and the terms were 9 cents with, I believe, a half warrant at 14 or 15. The stock's now trading at 24 cents, which is exciting for anybody buying on the open market, but particularly in the financing, where your initial investment, if you did 100,000 shares, would be worth almost $25,000, and then include the warrant on there, which is just starting to get in the money, and it's another $5,000 on top of that. Pretty exciting returns to be made in just a few months' time, wouldn't you say?
Oh, yeah, and that's a great example of everything we're talking about. And both these stocks, as you said, I've got private placements in them, and they have a 4-month hold period on them, and I can't sell them right now. After that hold, I could if I wanted to, but that stock has kind of got the same setup. If someone looks at the chart, when it was around 10 cents, that's when they raised the money. And in the private placement, it wasn't doing hardly any trading volume at all. And then it broke out, had a tremendous surge to 20 cents, and the volume has picked up, and it's becoming one of these top volume stocks almost every single day. And now it's consolidated, and I think it broke out kind of again around here. So, it could be exciting. It could run up to 30 or 40 cents before the year's over if it attracts more and more of these type of traders that are using the technical software and buying things like that. And it is getting, more notice all over the internet and on mining websites and so forth, which is really interesting. But that's kind of the thing about a lot of these things is I'm trying to buy them either now when they're in the situation this is now, or do it early on when we bought the financing in this one, which is where I think the Carube Copper play is at now. I think it's in the same spot that IDM Mining was when it was at 10 cents, but we'll see. It's the thing is I'm buying baskets of these stocks because I can't really predict for sure 100% that they're gonna do what I want. So just in case one of them becomes a dud or whatnot, so that's the way I'm doing it.
I've said this before on the show, but anybody who's interested in getting an education on these private placements, if you haven't done any or not many before, feel free to email me at colin@palisadeglobal.com, and I'm going to get Mike's contact details at the end of the show. I'm sure he'd be happy to hear from you too. Mike, we're getting a little short on timing here, but I want to end with a question in terms of the bull market in gold, and I really feel that at this point there's no stopping this bull market in gold. But one thing that's concerning is we haven't had a stock market meltdown. In fact, we've had this melt up. Everything just keeps moving up. And I'm getting worried if the stock market continues up and up and up as gold's rallying, what happens when the stock market finally comes down? I think you're of the opinion that a stock market crash would be good for gold. But how do you make that claim when 2008 stock market crash was so horrific for everything?
Yeah, well, the 2008 situation... First of all, we've seen two bear markets, the 2000 bear market and the 2008 bear market. In the 2000 bear market, gold bottomed in 2000 and went up as the stock market fell for 3 years. So just because the stock market declines doesn't mean gold's going to have to fall. And this situation with gold and the whole big picture is different than it was in 2008. In 2008, gold was actually in the mining stocks were doing very well against the stock market. They weren't really going up tremendously, but they weren't dropping during 2007 and in the summer of 2008. And then in 2008, during the market meltdown, they, of course, collapsed with gold. Now, one thing that was different back then is gold really became a giant momentum trade for hedge funds and individual investors, and I think when the market crashed, it got caught up with everything falling, and the only thing that really went up was the U.S. dollar and Treasury bonds. Now we seem to see gold is I think it's actually kind of disconnected from what the stock market's doing, and it doesn't really seem to matter so far this year. If the stock market's up or down, gold just seems to be going up, and the timing of a stock market crash, I'm not sure, first of all, I'm not sure the market would crash like it did in 2008. It could just decline like it did in 2000, which wasn't really a crash. It just fell for 3 years. And that's really how a lot of bear markets happen. In fact, if you take out the 87 stock market crash in 1929 and the 2008 thing, almost all the other bear markets were just declines nonstop when they happened. So that's the most likely scenario. But I think gold also is likely to go up. And I think we've seen that so far this year, too, when there have been times when the stock market's been weak, such as those 2 days following that Brexit situation, gold actually rallied as a response. And it went up along with the Treasury bonds and the U.S. dollar, which is very interesting. In 2008, when the U.S. dollar went up, gold would go down. So the relationships, the way gold's trading is different from it was in 2008. And I actually don't think gold is necessarily, I actually think what's going on is all currencies are actually declining in terms of gold, but the U.S. dollar is declining less. And that's why it seems to be going up. It's not really going up in terms of gold, but going up against the euro and the yen and so forth. So I think we're in a weird market environment, really never seen before. It can't really be compared to 2008. The other big difference is, I think, which is more important than the stock market, is the bond market, because we got these negative interest rates all over the world, and the U.S. Treasury bonds are not negative, but they've reached record low yields. I think it's not the stock market, to me, isn't really the area of interest but it's the bond market. And I think someday in the future, I can't time it, that these bonds are going to go into a bear market, and that's going to be an ultimate driver of gold going to a higher price, because once the bond market can't act as a safety trade, the only thing left will be gold. That's a different view than a lot of so-called gold bugs have. Most people talk like the currencies are all going to melt down, the U.S. dollar is going to go to zero or something, or there's going to be currency wars and all these different things, but it's usually currency is the word they're always using. To me, it's the bond market that's going to be the most interesting thing that drives gold higher ultimately in the future. Whether that is going to start in 6 months or 3 months or 2 or 3 years, I don't know. But what I do know is gold's in a bull market, and when something is in a bull market, you've got to accept it. And you can't really second guess it. You can't figure everything out either. So much of what I've said is speculation and rambling about what might happen, but that's all everyone is doing when it comes to trying to predict the future. And you don't need to predict the future. You just need to accept what's happening now, and that's we're in a gold bull market, and you got to take advantage of that.
All right. Well, Mike, thanks so much for coming back on the program. As promised to our listeners, could you please share some of your contact details and, of course, your website, which is a great resource, is wallstreetwindow.com.
Oh, certainly. Yeah, if they just go to wallstreetwindow.com, we've got a free newsletter, and actually what they'll get with the free newsletter is a free focused stock pick once a month. And the last report was about IDM Mining, actually. And it's not simply a exploration play. It also is a mine it's developing. So it makes it a kind of a bigger potential stock down the road also. But if they want information on that stock, they can go there and get what I put out about it and so forth. And be glad to share that.
All right, Mike, thank you so much for coming back on the show.
Yeah, thank you.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?